Welcome back to the channel. Lot to unpack this week, lot to talk about. With headline inflation now dipping below 2%, hitting 1.6% for the month of September. What does this mean for the Bank of Canada as they are meeting next week on October 23rd to discuss their next policy rate decision? Will they end up cutting 50 basis points? What are the markets expecting? And more importantly, what does it mean for Canadians with variable rate mortgages, those looking to maybe get a variable rate mortgage as they get out into the market? A lot of things to unpack, especially thinking about the Bank of Canada now has their business and consumer outlook surveys, of which are very important to the Bank of Canada, their next policy rate decision. Remember, they are extremely data dependent. What is the current economic conditions here in Canada tell us about what the Bank of Canada could be doing next week? So we welcome you back to the channel. If you have not subscribed, we invite you to go ahead, hit that subscribe button. Don't forget to hit that notification bell, as well as don't forget to leave your thoughts, questions, and concerns in the comment section below. Let us know what you think. So let's kick it off by talking a little bit about the CPI headline inflation print that came out earlier this week. And ultimately with headline inflation, as we mentioned, at 1.6% for the month of September, that is extremely low. We haven't seen inflation prints that low in quite some time. Now, ultimately, we understand the Bank of Canada has a mandate to get inflation to that 2% target. And it looks like we are getting that potential soft landing, that aiming for that 2%. And with all things considered, obviously, it's not a straight and narrow path. If we take a second and look at the core, medium, trim numbers of those inflation numbers, obviously those things stripping out volatile items like food and energy, while it is a little sticky from month to month, we're still sitting around 2.3 to 2.4% for these measurements. And ultimately, that is a little bit of a problem for the Bank of Canada, but I think it's going to be shadowed by the fact that the overall story of inflation is continuing to trend down. Remember, Bank of Canada has to get that 2% target. And if we were to take a second and think about what the consensus is among central bankers, obviously looking at the Fed, looking at central banks in Europe, across the globe, they do believe that inflation is going to basically subside and that they potentially have it under control. Whether you agree or disagree with that statement, that seems to be what the governor of the Bank of Canada and even Jerome Powell seem to be, mentioning in their conferences. Now, ultimately, as we know from Governor of the Bank of Canada, Tiff Macklem, at every single press conference, one that is very anticipated for next week. Very interesting to see what type of guidance they're going to be providing for Canadians. And make sure to subscribe to the channel. We'll be covering that conversation next week. But, if expectations broadly align with the Bank of Canada's guidance there, where they're forecasting, well, that expectation, if it drops, well, ultimately that means that we could see the Bank of Canada continue to be on that rate cutting path, that continuously cutting those rates. And if we really look at some of the reasons why those inflation numbers still remain, around 1.6 to 2%, well, a lot of that has to do with mortgage and interest costs, which make up 16.7% of the bucket. And obviously things like, obviously insurance, food purchased from restaurants, these particular items, property taxes, all these things that are driving inflation up potentially could subside. I mean, maybe not car insurance, because we definitely have a major concern with vehicle thefts. But with all things considered, I mean, as the Bank of Canada continues to lower its overnight lending rate, that policy rate, well, that means that those mortgage interest costs could potentially be pulling back and could be easing over the next short to medium long term. Right now, I think we have to zoom out for a second, really understand what the Bank of Canada is looking at. And obviously, we have a major dip in gas prices. That is a major contributor to why inflation dropped. I mean, we could expect oil prices, fuel prices to escalate in the weeks and months ahead as continuous global, tensions in the Middle East, these geopolitical issues continue to wreak havoc on markets. I mean, we have to take that into consideration as well. So ultimately, as we look at all these components together, I mean, the Bank of Canada does believe, I think, firmly believes that inflation is under control. Now it turns its attention to the economy. What is happening with unemployment? What is happening with consumer sentiment? What is happening with, obviously, spending in the economy? And this is where we turn to some of these consumer reports that the Bank of Canada, has publications for. Obviously they do these surveys, and it's a really mixed bag of emotions here with these surveys. I believe it's a very dovish. A lot of Canadians right now are conscientious about their spending. They're very conscientious that inflation is going to get to 2%. And this is where the Bank of Canada really will have to focus on the economy, because it can lower interest rates to pretty much near zero. Not to say that they're going to do that. I don't think that's going to happen. But basically what they're trying to do is spur the economy on, right? Basically get Canadians out there spending their hard-earned dollars to help contribute to the economy. And many Canadians are just not having it. I mean, there is a lot of distrust amongst Canadians when it comes to the Bank of Canada. And a lot of Canadians that have, expressed their concerns about Stats Canada and their reporting of these numbers. I mean, whether you agree or disagree with it, I do believe that inflation is not at 1.6%. I mean, just walking into a grocery store, yes, maybe the rate of change, the price point of certain items going up exponentially is maybe behind us a little bit, but nonetheless, they are much more expensive than they were several years ago. Or this is literally the conversation around what is happening with Canadians. Are wages keeping up with the pace of inflation? And this is literally the question. Are we getting into a deflationary period with inflation now below 2%? And if we strip out things that we're talking about, the food and energy, obviously more importantly, if we strip out things like the mortgage interest cost, right, which makes up a huge component of this 1.6%, we would have inflation hovering in and around 1%. So let that sink in for a second. I mean, that is basically problematic. If we don't see all these mechanisms working, the Bank of Canada is going to be pulling back on that lever, dropping interest rates. And this is where, when we look at the business outlook survey, businesses believe, hey, we're going to get inflation, down to 2%. We're going to stick that landing. Obviously, it's not going to be a smooth and steady road to that 2%, but it is happening, right? And now as it turns its attention to the economy, well, we have to understand, looking at the bigger picture, now zooming out, we have the Bank of Canada cutting. We have the federal government introducing new changes, right, to mortgages, allowing multiple things to be, happen right now. And we've talked about them in previous episodes. I don't want to sort of flog this dead horse here, but, we have that 30-year amortization, insured mortgages up to 1.5. Now we have the removal of the stress test for Canadians that are basically just switching over their mortgage to a new lender, not taking on new money. But if you're refinancing, you can go up to 90%, up to $2 million if you're adding in a rental unit. And like we talked about last week, I mean, the picture that is being painted right now is of a dual, Bank of Canada and government trying to really spur on the Canadian economy. And ultimately how this will play out is super, super important. We'll be tracking that here on the channel. We'll be talking about what happens next week with the Bank of Canada. I would love to hear what they're going to have to say, how they're going to guide to what they're talking about when they potentially do cut. Now, economists do believe that, 50 basis points is not unheard of. It's not something that, hey, you know what? It's a completely out to left field type of conversation based on the current state of the Canadian economy. And now with the 1.6% inflation, headline inflation print, well, it definitely gives the Bank of Canada the cover it needs to continuously lower that policy rate. Will it happen is ultimately another question, or will we see just a 0.25% cut coming next week, especially because the Bank of Canada will have another rate announcement coming up in December. So we'll see how that plays out where we end off the year. But I really want to focus in on a few different components here. I mean, looking at obviously what is happening with variable rate mortgages, because we are getting a lot of questions now as that conversation changes. It's important to understand that we should adapt our conversations to the shifting times. Maybe a few months ago, we weren't even maybe talking about variable rate mortgages right off the hop when they started cutting in June. But now as they continue to show that they are cutting these policy rates and that they are committed to basically, bringing the economy back to life, and some of the mechanisms they have is obviously lowering interest rates. Well, we have to really have that conversation with our clients. And actually, they're bringing that up to us saying, look, and what do you think about the variable rate mortgage? And ultimately, if you believe that the Bank of Canada is going to be on this path to cutting rates and potentially much lower policy rates by the summer of 2025, then it is worth having that conversation, understanding what your payments look like, what that conversation can look like. Are you willing to maybe pay a little bit more today to save tomorrow? Or are you willing to take the savings up front and potentially, ride out a shorter term mortgage? Because ultimately the real question is right now amongst a lot of our clients is the FOMO around the rate, right? Especially if they're approaching renewal, they're closing on their mortgage with the environment being so volatile right now with interest rates, especially fixed rate mortgages jumping up and down as that 5-year Bank of Canada bond continues to teeter. We've seen it go up about 30, 40 basis points over the last little while. Some of the major banks will obviously be talking about it on our rate update, but this is really the conversation. Taking that variable rate, some clients feel that, look, because of the volatility, taking the variable rate mortgage allows them to lock into a fixed rate when they feel or when the rates on those fixed rate products begin to drop, and they have that option. They also have the benefit of a 3-month interest only penalty to get out of that mortgage if they decided that they wanted to leave or port that mortgage over. There's so many different options, and obviously taking that variable rate product comes with some risk. If you're going to take on a variable rate mortgage, it's not designed for everyone. This is just the reality. I mean, a lot of Canadians may have been pushed into a variable rate mortgage a few years ago, right before interest rates started to go up, and they felt the pressures of those particular products. And now we have to really understand, okay, if we're at the top of the rate game, is it best to take something that's a little bit easier in the sense of that's something that floats and that is allowing you the opportunity to weather that storm, watch your payments come down, or if it's one of those fixed payments, variable products, those static payment mortgages with the trigger rate, well, is it going to allow more of your money to go towards principal than towards interest? And ultimately making sure that you're having that conversation with a mortgage professional that can guide you with those different products so that you can understand the risk. But ultimately with the Bank of Canada now on the path to cutting its overnight lending rate, what does it really mean for the real estate economy? And obviously with home prices, with this inventory, there's a lot of conversations around the future of the Canadian real estate market. And obviously we're not going to sit here and speculate on what could happen because anything can change very quickly, especially with sentiment. That is the major driver right now. I think what we're seeing happening right now is obviously a lot more Canadians looking at their opportunities who are waiting to buy a home. I mean, there's not Canadians who, weren't really thinking about it. These are Canadians that were thinking about it a while back. They just haven't pulled the trigger yet. And ultimately, those who have the means, they have the resources to buy, they're looking at the opportunity cost right now and saying, hey, right now, the Bank of Canada is potentially going to be cutting further, and I don't want to compete in multiple offers. I don't want to be in that market. And that's what we're hearing from our clients, and ultimately, get pre-approved. If you're looking at buying, if you're looking at your options, make sure you're qualified, understand your options, and ultimately understanding that, hey, before you close, having that conversation with your mortgage professional. Maybe you're locking in a fix for the time being, but that conversation can change. We've had lots of clients who purchased a few months ago, now approaching closing and thinking about switching their product from a fixed to a variable, and ultimately having that conversation. And if you want to find out what some of these payments could look like and ultimately what the conversation is around those differences and the options, there is the link to our app in the description box below. You can download it for free. Play around with those options. It also has a lot of valuable tools to help you in your home buying journey or even your refinancing or restructuring journey. But let me know what you think will happen next week with the Bank of Canada. Will we see 50? Will it only be a quarter? Let me know what you think in the comment section below. But until next week, thanks for stopping by. We'll see you next week.